Hello, traders. This is Blake Morrow with Trader Summit, and I have Mr. Richard Matthews from One.io back from Monte Carlo. Good to see you.
Yeah, feeling good, feeling very relaxed, suntanned, had to keep a hat on, nice and warm. Nice to swim in warm water for a change. That helped.
That was so that's got is there a quite a big difference between Monte Carlo and where you swim the English Channel over there?
Yeah. The sea was in centigrade. It's 24, 25 degrees centigrade. And this morning here it was 17 degrees centigrade. And it's very different. The whole experience is different. And even my wife got in and swam, which is really amazing. But beautiful, clean, lovely water.
Well,
But hey,
I'm gonna say personally, if it's below 32, I don't know if I'm gonna get in. So I'm just
yeah.
so speaking of warm waters, let's talk about the warm waters of the bond market. Are they warm enough? Because last time you were here, you discussed that, hey, there's going to be all this issuance. I don't know who the buyers are going to be. Yields continue to rally, and and since you've been gone, the bond market is just, I want to say, for lack of better terms, almost imploded globally, and yields have risen quite dramatically. So do you feel that there's more to go in do yields need to go higher and bonds go lower from here?
Yeah, well, we've talked about this before. All the governments in the Western world, for want of a better expression, have got to fund what they paid out for COVID. End of story. So if US and the US leads the world, bond yields rise in the US, the rest of the world's going to follow. End of story, because they're competing for a pot of money. There's still no real premium over inflation. It should be, I don't know, probably near 300 basis points above the inflation level. So you could see bond yields, I don't know, 6.5%, something like that. Armageddon, you would say. I don't completely discount that. I think you can see bond yields go a lot higher, but they've gone a long way very, very quickly. And I think you're going to see a little bit of pullback and people put their profits, take a breath and say, hey, whoa, let's hold on a bit. But as they rise, it's still a miracle to me how stock markets are holding in there. But you've seen some weakness, but you haven't seen anything like what you should see.
Yeah, I was going to say, well, the S&P, roughly is maybe down 5 or 6% in the last few weeks. We've corrected some, but are still, some would probably view as still pretty high. However, the one thing I think we need to take into account is the U.S. Economic data continues to be good. So how important is the non-farm payroll this week?
I think it's the most important non-farm payroll we've had for a long time. Uh, to me, I don't know, what are we going to see? Something around about the 175 numbers?
Yeah, I think that's what analysts expectations are.
Jolts was pretty good. Seems to be bouncing back unbelievably.
And the ADP and the
Yeah.
ADP data was a little bit weaker. So I
Yeah.
mean, where are you going to lie with that? I mean, if the market's looking at 170, 160,000, do you think we're going to come in line? Do you think it's going to be a good number? And if it's a good number, how do yields respond? I mean, it seems like the data continuously is better here in the US.
That's a good question. What's a good number? A lower number or a higher number? That's the difficult call, isn't it? I think whichever way we see it, you're going to see the market react pretty sharply on it. I suspect it will be a beat on the upside. I just have a gut feeling on that. ADP numbers, I think they're a real false friend. I don't think you can read too much into those. I think the jobs number is good. I'm sitting several thousand miles away, but the economy still feels pretty hot over there.
Yeah, I mean, you looked at the ISM services data, they were okay. Today they were in line basically with expectations. So, but I guess the question is, and you already asked it, is good data going to be good for the stock market? Because people will say, well, there's not a recession, not yet, so we buy
Yeah.
stocks. Or is good data going to say, going to be bad for equities. And you have people start to look at the market and say, the Fed's going to stay higher for longer, or maybe all central banks are. I mean, where do you lie in that respect?
Well, I've been saying higher for longer than central banks said transitory, I think. So I think they're going to hang in there pretty high. And I did see, I'm just looking at my screen, I saw derivatives was showing that the first cut expected now has been moved right the way out. And Fed funds are still showing at 4.5% in 2 to 3 years' time. So there's not a lot of cutting going to go on there. So a good number, a higher number, you should fundamentally buy equities on. I actually think it's the reverse logic, as we're alluding to. So good number, you look to short equities and short bonds because the Fed is, might put a hike back on the table for November. I'm not sure they will. I wouldn't totally discount it. And I know employment's the key number now, and I know there's some unrest in the labor unions in the US, which is unusual. We're used to it over here. But that could put pressure on wages. So I don't think inflation is dead and buried. I think it might be having a pause. And I also keep a real eye on what Brent's doing and what oil's doing. So I think that's inflationary, and that hasn't come through the figures yet. So I'm nervous on inflation, and the economy is looking good. So how could I expect to see bond yields lower apart from a temporary little blip as people book profits?
Well, then that takes me over to the dollar. As you've obviously we've been talking about, and you've seen, dollar strengthened quite dramatically. The euro is trading around the 105 level. The sterling is near 121, and the pound actually completed a big head and shoulder pattern that was widely telegraphed and discussed, and it's done. So what's next? Do we get more dollar strength, or does the dollar actually start to pull back? What are your thoughts there?
The US economy, to me, defies every expectation. You've had such a rapid rise in rates and massive tightening, and the long end is going to pull rates up right the way across the board. But the economy is still good. So you've actually got two reasons to buy the dollar. You've got great yields, and you've got an economy which still looks like it's running well compared to the UK, which as normal is a bit of a basket case, and Europe, which looks a total basket case, especially with winter approaching and higher oil prices. So buy dollars, wear diamonds.
Well, that's the word on the street. We're gonna buy dollars and wear diamonds. And so, any targets that you have for the sterling or the euro or the dollar yen?
Dollar yen's an interesting one. Did they intervene or didn't they intervene? It's I don't know. I don't want to talk about dollar yen because I think it's political, and there's a central bank playing there, and it's really, really dangerous. Cable, I think it has another look at 120. And I think that the euro breaks down towards parity. Whether it sees parity, I don't know. But I'm a real dollar bull. I can't see any other game in town.
Path of least resistance for the dollar is higher, is what
Yeah.
you're saying. All right. Well, Richard, I love your work. Love having you here, and it's nice to have you back after a week hiatus or 2 weeks hiatus, however you want to look at it. How do traders follow your work personally?
You can find me on Twitter, which is at Dickie Matthews, or I'm on LinkedIn, or contact me direct through one.io, and I'll always answer emails, even if they're rude about me.
All right. Well, we appreciate you spending your time with us. If you all like what Richard does here, make sure you give him a big thumbs up, subscribe to the channel down below so you don't miss any of this exclusive content only on the Trader Summit. Thank you, Richard. I will see you next week, and we'll talk. We got inflation next week, and we're going to be chatting about inflation, I'm sure.
Yeah, look forward to it. Enjoy. Have a nice Friday. Nice quiet Friday afternoon.
Take care.
Cheers now. Bye-bye.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.